Hello and welcome to this August edition of Property News. Today I want to give you an update on the UK economy, talk about what's happening right now in the property market, give you my predictions for the next couple of months, which is always a scary bit, and finally I want to add a few really important tasks to your to-do list. So my name's Tony Law from Your First Four Houses, and my channel is all about helping you replace a job-based income with just a few investment properties so that you can give up the day job if you wish and just live off your rental income like Liana and I do. If this is your first time here, be sure to subscribe to the channel and click that bell notification icon so that you don't miss out on any of the free content that I give you each and every week. So let's start things off by looking at the UK economy. So perhaps unsurprisingly, the rolling monthly GDP figures show there will be an enormous hit to the economy in the second quarter of this year. And in the 3 months to May, GDP actually fell by 19.1%. So when the second quarterly figures are published in August, they will almost certainly confirm that the UK is in a severe recession. As if to confirm this, gold hit $1,940 an ounce, which is the highest on record. On the 8th of July, VAT was reduced to 5% for goods and services supplied by the tourism and hospitality sector, together with a £1.57 billion emergency support package that was offered to help protect the future of theatres, galleries and museums. And from the 4th of July, cafes, bars and restaurants were allowed to reopen, but obviously with lots of new safety measures in place. At the time of filming, unemployment appears to be relatively low at 3.9% according to the Office for National Statistics. However, it's really important to note that this is only for the latest recorded period, which is between March and May. The next update on unemployment is due out on the 11th of August, and although I expect to see a rise, as I mentioned last month, I think we'll see the biggest rise in the autumn, with some reports stating it may be pushing beyond 9%. Perhaps as a measure of things to come, some employers are being swamped by applicants when posting for a job, especially within the hotel and hospitality industries. As a really good example, a Manchester hotel owner recently advertised for a receptionist to find they had 1,000 applicants for that one job. And even my own daughter, who I'm proud to say has just got a first in filmmaking, found that she was competing with 500 other applicants for a waitressing job, which I'm glad to say she got. In an attempt to encourage more people to return to the office, from the 1st of August the government dropped their advice that people should be working from home. However, in a recent survey of 2,000 adults, all of whom are currently working from home due to the pandemic, 4 out of 5 said that they would like to continue working from home moving forwards if they could. 48% that they had already spoken to their employers about this, and 57% said that working from home had actually made them more productive. In last month's property news, I highlighted the recent coronavirus flare-up in the US, which had only just started at the time, and I said I hope to have better news for you this month. But at the time of recording, the US infection rate continues to grow, and as a measure of the severity of it, Trump has just scrapped his Republican convention due to this flare-up, which is obviously the last thing he would have wanted to do in the run-up to November's election. And even in the UK, we've just reintroduced a 14-day quarantine for UK travellers returning from Spain. On the 24th of July, face coverings became compulsory in shops and stores, and what's becoming really clear at the moment, at least as far as I'm concerned, as we move through the summer, is that there's a real chance of more localised coronavirus spikes, especially as we move into the autumn. But to end this section on just a little bit of good news, in July a coronavirus vaccine developed by Oxford University appears to be safe and crucially triggers an immune response. Extensive trials are currently underway and the government has already ordered 100 million doses of the vaccine. So moving on to the property market. Well, the first thing to say here is that it really does not feel like house prices are dropping, does it? In fact, if anything, there appears to be a little bit of a mini boom going on, which on a personal level is fantastic, as we've just put our house on the market. Rightmove are stating that the national average asking price for a property is £320,265 compared to £312,625 in March before the market closed. That's an increase of 2.4%. 44% of the properties that came to the market in the first month after the estate agents reopened on the 13th of May have already been marked as sale agreed, compared to 34% for the equivalent dates last year. Of course, a really big reason for this current mini boom must surely be the huge announcement that stamp duty is to be scrapped below £500,000 until the 31st of March 2021. Despite the impending recession, this has encouraged buyers to buy and sellers to sell. There are, however, some really important points that you need to be aware of regarding stamp duty, and so can I suggest that you watch this video where I run you through the various different pros and cons of this change, because there's some really important things you need to be aware of. The other huge recent announcement that was on the 1st of August, new permitted development rights come into place. These will mean that planning permission will be granted for self-contained flats built on top of certain existing purpose-built blocks of flats. And from September, further extensive PD rights come into place. Amongst other things, you'll be able to add additional stories to properties through a fast-track approval process. For full details of these, I've included the Town and Country Planning regulations in the description box below, or there may be a link just up here, and I would strongly encourage you to download this and read through it to see exactly how you can benefit from these brand new PD rights. On the 24th of August, after a 5-month suspension, the courts will once again be able to hear possession cases, although conversely, new rules set out by the Welsh Government state that landlords in Wales now need to give tenants 6 months' notice when repossessing their homes. In some areas, HMO landlords are seeing more voids, where their tenant base is made up of foreign nationals. Now, I was thinking about this, and I'm thinking that this is presumably because many of these workers either returned to their own country before or maybe during lockdown, or are returning right now as the jobs that they were reliant on disappear. I've also noticed an increase in HMO voids surrounding some of the bigger airports, as airport workers, cleaning staff, etc. are all impacted by the reduced demand for flights. Conversely, UK holiday lets appear to have really bounced back into favour, as many of us, Liana and I included, choose UK-based holidays over going abroad. By the way, if you're finding this video helpful, it would just be awesome if you could click on that like button down there. It really helps me if that's okay. So let's move on to my scary bit, which are my predictions. But first of all, let's look back at last month. I kind of feel I can lay claim to these 3, and I was particularly pleased to have got the targeted VAT cuts prediction pretty much bang on. There's maybe 1 or 2 more here that I could put a tick next to, but we're going to have a little closer look at those next month. But on to this month's predictions. First of all, I've got to make it absolutely clear these are just my personal opinions. I may well be wrong. You've got to form your own opinions and do your own due diligence, especially when it comes to assessing any deals that you may be looking at. First one is going to be, I think the more experienced investors out there will start to snap up those potentially new PD sites, which is why you've got to download that permitted development sheet that I've got in the description box below and start seeing how you can find these types of deals and acting on them yourself. Next, I think there's going to be some really big delays in closing deals in February and March due to overworked solicitors, overworked surveyors, etc., overworked mortgage brokers in the run-up to the 31st of March deadline, when that stamp duty holiday comes to an end. For the same reason, I think there's going to be a price bubble before the stamp duty holiday ends, and I also think there's going to be a bit of a price drop after the stamp duty holiday ends, obviously on the 1st of April. I think there's going to be increased demand for UK holiday lets moving much further into autumn, as many of us sort of want to get away and still have that holiday, haven't been able to do so abroad, but are now kind of moving more into the autumn period, especially for those UK-based holiday lets that have keyless entry and maybe limited interaction with managers. And lastly, as predicted last month, there's been the first arrest for the misuse of a bounce back loan. Now, I couldn't put a tick in my predictions, even though I did predict this last month, because it wasn't actually property related. However, I personally have renewed concerns HMRC will begin to focus on those who used a bounce back loan to buy a property. But again, it's just my opinion and I may well be wrong. And finally, let me give you a few quick points for your to-do list. And you want to hang on to the last one because it's really important. First of all, double check your investing area. Is it still right for you and your strategy? Because it may have changed with the changes in demand. If you want to talk this through with me, book yourself a coaching call. You need to complete any deals before the end of January, in my opinion, so that you've got at least a couple of months buffer in the run up to that holiday, the 31st of March stamp duty holiday ending date. Because they always run on these things, and if you start to get into that zone where everybody's really working hard, you may well miss that deadline. You need to put systems in place to organise an awesome virtual viewing experience if you have HMOs. I honestly think those landlords that are having more voids in their HMOs will definitely be able to fill them quicker if they get themselves organised with an awesome virtual viewing experience. And I'm going to probably be doing a video on how exactly you should be doing that. If you have an HMO and you have indeed got continued voids, and this is definitely the case in some parts of the country, maybe have a look and see if it's possible to convert that property, even if it's only temporarily, back into a single let. And so whilst this may sound mad, I'm going to encourage you to actually look at the numbers. Obviously there's going to be a lot less hassle in doing this, but just look at the numbers. Does it stack up even if it's only for a shorter period of time? You need to try to accumulate a cash buffer, crucially, that you won't touch, even if it's only for a small amount of money. Now, I appreciate that some people watching this video, that's going to be a real challenge. But even if you can just put a few £1,000s to one side in a bank, honestly, I think that is a really good thing to do right now. You've got to write out your business plan. In my online property masterclass program, we use a single page business plan structure, which I put a lot of time putting together. Although it's a single page, it's really powerful. But however you do it, now is the time to get your business plan down on paper. And lastly, can I encourage you to get out there and support your local smaller independent businesses? They need our support, and they certainly need our business. Because if we don't start spending our money with them today, well, do you know what? They may well not be there tomorrow. And perhaps, and this is the really important one that I'm scared about sharing, perhaps most importantly for your to-do list, I'm going to suggest that just for now, just for this month, you don't buy any property. The market is really hot at the time of recording this video, and unless you found an absolutely cracking deal which you must go ahead with, I think there's an argument to keep your powder dry. One last time, it's just my opinion this, I may well be wrong, you've got to form your own opinion on that. Now, I've grouped together 10 videos into a playlist here on YouTube that will teach you all of the fundamentals that you need to know to build a portfolio and replace your job-based income without you needing to put lots of money into each and every deal. And I'd really encourage you to sit down and watch all 10 of these lessons back to back. You'll find the link for them coming up on the left-hand side of your screen right about now.